Good evening, everyone. Welcome to the Hurley Investments Market View Commentary for the 27th of January. This is the last week of the month. And I just asked the question to the group, what happened today in the stock market to make it go down 4.6%? And a couple people have let me know NVIDIA, oops, I want to put that down a little bit more. NVIDIA tanked. And NVIDIA tanked on some news, and I'm gonna put it as easy as I can. Tanked on the news that DeepSeek launched a free open source large language model it's AI, right? For $6 million. And so I found it very, very interesting that one, well, let's use logics here. Yes or no? Does this seem plausible or not plausible? What do you think? Plausible or not plausible? Stuart says yes. Dave says no way. Mary says heck no. Anybody else? Because a comment was just made, and I'll just go so far as to this say, Chinese aren't exceptional in the real world results. That's all I'm going to say. If you go through it, it's obviously biased towards China. It's AI, but it was funny because NVIDIA came out and basically NVIDIA said, no matter what they have, they still need chips to run the computers. And suppose it was created by 100 big mainframe computers that were used for stock market trading in the past. Short answer is this. Short answer, I would also expect NVIDIA to come back pretty quickly. Now, that doesn't mean that Keeve and I aren't trading texts this morning. Text from Keeve, we are absolutely screwed by NVIDIA this morning, down 11% pre-market. I may have said, Will, bleep. Fear of no rate cuts in China are going to kill us today. But let's see what happens in the first half hour. And it seems like we have the right stocks protected. And I love the idea on what that meant or what that said, because if we go through our watch list today, Alphabet, Google L, down $8.40. I don't know if you knew it, but we had 190 and 200 puts on in place. We actually were slightly profitable on Google today. We made up basically $8.65 on the way down on Google Alphabet today. If you look at Apple, we had no protection on Apple, up $7.23. Baidu up $2.11. Out of the money protection on Baidu. Yes, that's a good question. Bank of America, letting the banks run right now. So Bank of America ran today. No protection on Bank of America. Where's the other one? We did have Meta up $12.39. Micron, where's Micron? Micron down $12.04, but we have 104 long puts on Micron, making up 90% of it on the way down. Nvidia down $24. We got 125, 110 bear puts on in place. We made up about 10% of the downward movement. And then I thought it was kind of interesting down here at the bottom, Verizon finally moving higher with Walt Disney also moving higher. Market was down today. S&P 500 down negative 1.46. It's a rough day. But this week is earnings and rate cut. I'm just going to call it an opportunity. On Wednesday. Someone made a comment. We're going to go through a bunch of comments here. Someone made a comment on Kevin, where will the S&P end in January 2025? And they noticed I was all over. You said 2.4%. You said down 2%. You said up 2%. And today you're going back to up 2.4% for the month of January. Yes, the short answer is, and this is going to be a very interesting comment from some of you, especially those of you that are new. We don't know the future. We do a lot of research and we collar trade to protect to the downside. There's a reason why. And this is kind of the make or break. And I think this is why most of you came to us as clientele, or the reasons why you're here today to pay attention to what's happening. There are a couple of you that joined at roughly the worst time and we're waiting for Baidu and Disney to come back. But it has been proven since 2006 that if you can make up something on the way down, convert to shares, you will outpace the market in the long run. And yes, there are a couple of you that could come at me right now and say, well, it's not happening right now. And I would agree with you. There are a couple of you that have been with me in Boeing, and you're like, Kevin, we got hosed in Boeing, and I agree with you. I'm not saying in any way, shape, or form that we're perfect. In fact, if anything, we are far from perfect. But we have the model that runs this that says we should be working for you. which means we watch the markets every day. We add protection when it is most likely to see stocks lose value. And the biggest one, we know what you are individually in because we are in the same thing. We're trading exactly what you are. It's much easier to see a single stock beat the market by hundreds of percents. But a couple of you have asked some questions, and so please don't take this next part wrong at all. But I'm going to call it the but you said. And I put two buttheads in there, Beavis and Butthead. But you said diversification is not protection. And I stand by that. But let me give you the buts. But it doesn't mean in what we do, it can't help out. I mean, if we had Apple, we had other stuff today because we weren't all in NVIDIA. We're not all in the Mag 7, which are really the Mag 8 or 9. We don't just dump it into everything. If you look at the market crashes, everything crashed. In fact, I like what Buffett said, and this is a Buffett quote. When you don't know what you are doing, you should put your money into a fund. Indirectly, he was making fun of all of these hedge fund managers that are hedging by putting people into a fund where they don't know what the cost is, where they don't know what is in it. It's just directed, hey, you want a bonus? Get $5 million into this fund, you'll get 50 basis point, 0.5% bonus, and off you go. Market crashes are not prevented by diversification. So yes, I have said diversification is not protection. It's not. But it doesn't mean you can't diversify in a couple stocks and a couple sectors that are the best of the best and be protecting yourself using a little bit of diversification. But please don't think it's protection on your portfolio. All right, this is the last day that I have the handout. If you guys have not got it, download the handout of the 2025 stock market projections. It's an Excel spreadsheet. It will be not here next week. It has been updated on some positions we are looking at, but please, if you want it, download it right now. It's where we've come up with our target prices on about 60 of the 1,080 stocks that we went through over Christmas. And yes, I spent 1 week with COVID and Christmas, but this is the last week. Go to the handouts, download the file because it will not be here next week. But a couple of you have sent some emails, which I love it. You said your price targets were very accurate last year. So yes, they represented where the stocks might be in 12 months. And remarkably well, a lot minus the financials hit those targets. And that's where they were at for last year. Tony, go to the handout section of your GoToWebinar. It's one of the not able to download, huh? You should be able to go to the handouts and download the spreadsheet. If you can't, just send me an email and I'll email it to you. khurley@hurleyinvestments.com. K for Kevin, khurley@hurleyinvestments, plural.com. I'll get that emailed off to you. So yes, short answer, they were extremely accurate last year minus financials. At any time, if I am modeling, the stock market, I do not think it will be accurate. And something made the comment, well, then why are you doing it? And the comment is because it gives me an idea. It gives me an idea what hedge funds are looking at. It gives me an idea what institutional money is looking at. It gives me an idea of what other people are modeling their funds and how they're coming up with those prices. Just because I disagree with where other money managers are trying to put people's money in, which again, understand 97% of them don't meet the S&P 500, don't beat it. And this is not like just for a year. This is for the life of the fund, always. Well, yeah, they had some good comeback years. Yeah, I mean, significantly different than what we do. Go take a look at the results, Hurley Investments results 2020. We're on the verge there. But why do I do something that doesn't matter? I'm not saying it doesn't matter. I'm just saying it might not be accurate. But I do it because the market's doing it. I'm doing it to understand what the market's looking at. I'm doing it because if that's what they're saying, I better know what they're saying if I'm going to say something different. So I model that spreadsheet. I've got all my stuff in here. I'm willing to give it to you guys. It's what I do because we were so extremely successful at being at that price range last year. All righty. The third question was asked to me. But you said anything you make on the way down is a profit on the way back up. And I will put that in there. On the way back up. Because your alternative is the buy and hold, which means you take your losses, pay someone to take those losses, and then wait for the stocks / market to come back. If that's what you're willing to do, don't have it being managed by someone else. You can do that yourself. You can take the number 1, 2, and 3, the S&P 500, the NASDAQ, top 100, and really the Wilshire, or you can go over to Europe and use the FTSE. You can create a better fund for cheaper than 94 to 96% of all the professionals out there. If you only made $1 more, you'd be $1 better than buying and holding. The last one, and I'll say it again. You dollar cost average without adding more money to the account. Correct. We don't go ask you to put more money into your account when we are wrong, because we protect. So here's the short answer. And I know, again, some of you are new here. It makes no sense to me for me to say, oh, I think Disney is going to go up. And when it doesn't go up and loses half its value like last year, I then come back to you and say, hey, Disney's now going to go up this year. I got it wrong last year, but because I got it wrong and Disney's now so cheap, go find another 50 grand so we can run it this year, because this year I just know Disney's going to go up. Well, in real life, money managers don't know crap. We know a fancy way to talk about the stock market. Does this mean I've never taken money from someone? Well, no. There's a couple customers for Bear Stearns that we said you better put some more money in. But in general, our job is to take the money you give us, protect it, to then convert those profits from the long puts into more shares, so that when the stock market comes back, you have 20, 30, 40% more shares of stock. We recently have done this with Apple. We had a drop in Apple. For the most part, it made up 100 shares, not necessarily for everyone, but we did have another drop in Apple where we made a pretty good profit. So we chose to add shares at Apple at around $222. That was $8 ago. We picked the bottom pretty close to being the bottom for Apple, cashed in your long put protection, made a nice profit, took those profits and added 100 shares of Apple at $222. And I'm going to say this tongue in cheek, mostly, if not 100%, paid for with long put protection. So now you have 100 more shares of Apple stock to pay you dividends, to move up to $347 by the end of this year. And at no time did we go and call you and say, hey, we need another $22,000, $22,500 to go buy another 100 shares of Apple. We took the profits from your protection to buy those shares. I have a very interesting 3-minute Mark Cuban Facebook reel. I'm going to put it in here. You guys click on it. This is a minute and maybe it's three. I'm pretty sure it's a 3-minute and 20-second video on how he used long puts, sold off some of his Yahoo stock of that 1.9 billion, bought long puts because his stock cratered. It saved his buyout of his company. That long put kept his $1.9 billion safe. It is a very, very interesting video from Mark Cuban talking about how he's doing exactly what we're doing and how it saved his stocks, saved him from losing everything on the sale of his business. That's the short answer. Okay, got to take a couple of these off, but we do have we have 90 of the S&P 500 earnings reporting this week, and a lot of them are the tech stocks. Big picture, CPI. The big picture is the CPI, how it boosted our stock market the last 2 to 3 weeks. I want to find the part in here that I read that was very interesting. Got to find it. I probably should have highlighted it. There we go. Core PC inflation was up 2.8% year over year in November. Meanwhile, core CPI, which market participants were reportedly thrilled to see, was up 3.2 year over year on an unadjusted basis in November. The excitement over that core CPI number is that it was down from 3.3 in November. No doubt moving in the preferred direction, but also leaving no doubt that it isn't progressing to 2.0% in a rapid way. It should be noted that the 3.2% was a generous headline presentation versus the unrounded 3.24 number. It's pretty interesting that the good news is we're not seeing sticky inflation. If you look at the core CPI, 3.27, July 3.17, August 3.2, September 3.1, October 3.3, November 3.32, December 3.24. It's not a straight line, but a couple of these jumps up can be explained. September, October, November, we come off of summer gas, go to diesel gas. They make up some of those numbers. The egg pandemic, the ovarian flu, causing us to not have as many eggs available. There are a couple key points that you can point to. Do I think we're going to go down to a core inflation number of 2.0 anytime soon, meaning in the next 3 to 5 years? Probably not. And we probably won't go down to that because I don't feel there's anything President Trump can do, because I don't think that the government will allow it. Now that we got used to high-priced gas, we kept paying high-priced gas. Even Trump, only for a month, got it down to a realistic price number, and then it's back up higher, and we still pay it. Well, it's taxes. It is, but it's not. We got used to our gas prices being doubled. We're thinking, hey, it's not $4 or $5 or $6 outside of California, New York, New Jersey, some of those really blue states that have those higher taxes. And when we say, it got down to, $2.50, we're okay. We shouldn't be, because the real price should be around $1.60 to $1.30. I'd much rather pay gas at $1.30. But we got used to it. So if we get used to it and the right amount of lobbyists go to the government in the right way, they'll keep it up. They'll make more money. Please read through thebriefing.com. It's a very interesting article on inflation. And if you're not familiar with it, it's a great read. I'll leave the charts in. It really is something that will help you understand where we're trying to get to, and if or if not, we'll get a rate cut in January. For myself, I'm on the fence. If they are data dependent, we will get a 1/4 point rate cut on Wednesday, and it'll juice our markets until we see the tax sell-off. If the Federal Open Market Committee is not data dependent and are uncertain about Trump, so they're going to wait, once again, it'll put them behind the 8 ball. Once again, they will not be data dependent when they said they're going to be. And once again, we'll probably see that pullback in our market as the FOMC is always $1 short and a day late. It's shocking that they don't learn from past history. I'm not saying that we should be cutting rates excessively, but a 1/4 point doesn't make or break our markets. It doesn't make or break our economy, but that is good news to have us move higher. There's no reason to not do their 1/4 point if they are data dependent and the briefing gives you all the data you need to see right here. So we'll see what Powell does and what those 14 members to choose to do. Where all markets end this week, I'm going with higher. Going with higher because our market seems to be going higher. The Dow is this is not the right picture. Might have to put these in here. Dow should be bearish. Let me see if I have it. Let's see where my picture is. Come on, come on, come on, come on. This should be the first one. Maybe I am wrong and I don't know what I'm talking about. I am wrong. That was the picture, excuse me. Dow Jones Industrial Average, bullish. Not what I want to talk about. S&P 500, still technically bullish because we haven't had our crossovers. Kevin, we broke the 50-day. Correct. But we finished above it. So the one chart that people were talking about was the S&P 500. Technically, we are still bullish because we finished above the 200-day, and our MACD as well as the RSI show that we are still moving higher. NASDAQ, little different, right? Definitely broke the median line on the RSI. We are definitely below the 50-day and could not get up above it. But technically, we don't have our crossovers on the MACD. They are not there yet. So we are still technically bullish until we get all 3 crossovers. The nuance or the difference is broke the 50-day simple moving average and did not finish above it. All right. Huge amount of earnings. I'm not going to go over a lot of them, but the big ones for us, Boeing, General Motors before the market opens. We have Lockheed Martin and Chubb tomorrow. Starbucks tomorrow morning. Wednesday, big ones for us, Meta, Microsoft, Tesla. We do have some other ones that are rather important in there. IBM reports, T-Mobile reports, Whirlpool reports. Thursday, Altria reports, Caterpillar, International Paper, MasterCard, Murphy Oil, Cardinal Health, UPS, Valero, Intel, Visa, and the one I didn't have in here was Apple. Big ones for us to pay attention to. And then on Friday, oil, Chevron, and ExxonMobil, Clorox, and Phillips 66. More importantly, economic reports, durable goods tomorrow, consumer confidence tomorrow. Wednesday is the rate decision. GDP on Thursday, PCE prices on Friday. It's a big pre-market economic reports type of week. It would not surprise me to see a bounce tomorrow off of basically rumor mills today. How am I looking to trade? We're protecting for Q4 earnings. Basically, we're adding protection where we need. Interesting article. Trump says he'll demand the interest rates drop immediately. This is the one I mentioned last week. He has no say. They run independent. Really, it's going to come down to if Jerome Powell is data dependent or not. President Trump is a name caller. Called him a bonehead. He compared Powell to a golfer who can't putt. He is correct on both of those. It will be interesting if he looks for a new president. If the FOMC wasn't always a dollar short and a day late, I would think this would be a type of bullying. Yes, it is being a bully, but he's not wrong. They miss it all the time. Interesting article to read what he said. Here locally, have an interesting article. Salt Lake Ogden schools say immigrant students are welcome after Trump flips policy on raids. There are a lot of kids not going to school because they were afraid of immigration raids on schools. Yes, they can do immigration raids on schools. They prefer not to. It has to be in the interest of protecting the students. But yes, you can do immigration raids on schools. They're choosing not to. But out here, it did cause where we have a very diverse, it's kind of funny because a lot of people think, oh, Utah Mormons, a bunch of white, clean-cut dudes. Because the LDS, the Latter-day Saint Church, goes out and does a bunch of missionary work for 2 years. Between the ages of 18 and 19, they send young men to represent the Church of Jesus Christ of Latter-day Saints. They ride the bicycles. They do a ton of service work. There are a huge amount of different nationalities that are all over the state of Utah. They've got your little Brazilian town and your little Argentina town. There are some amazing restaurants up here. It does not surprise me that some people have come here illegally that are really nice people that fact of the matter are here illegally. I would hope that we go after the bottom of the barrel, that we go after the drug dealers, that we go after the cartels, that we go after those that are not contributing to society. But for the first time, I understand now where where some kids didn't show up to school for fear from their parents. I personally did not realize how that affected primarily the Latino community here in the Utah Salt Lake City area. Shocking, absolutely shocking, because I think it put a flag or a target on their backs, flagging, hey, we are here illegally. But it was nice to see that it was handled relatively quickly. Securities fraud, 530 victims. It actually is closer to 2,000 now. But here we have that person, and the only reason I'm putting this in here, that person here, former BYU quarterback that never was on the field, but a very interesting article when you start to read some of those. Hey, investment principal is going to be recouped within 12 to 18 months. Average 7 to 10% monthly return. We're going to pay you between 10 to 15% interest on your money. Well, we're actually finding out that it's closer to 1,500 to 2,000 victims, and it's closer to $100 million. But here is one more person that was faking results. Kind of funny, got caught when he made a $50,000 down payment on a Lamborghini as he liquidated $50,000 from basically an account. So let's hear it for the Securities and Exchange Division here in Utah to catch someone else. The problem is they don't ever back out the bull crap that he put out there, that his fund was doing, that was paying this, that was paying that through alpha influence. I remember seeing his commercials. What a load of crap it is. And man, I hope he goes to jail for life. Disney, why do I think Disney's going to do better? Iger's compensation grew 30% in 2024. He had $2 billion movies through Disney. We should start to see Disney going back up. I really like the fact that his base salary is only $1 million. He earned $8.3 million in stock awards for turning things around, $12 million in option awards, and $7.2 million in bonuses by hitting certain numbers. This is how we should pay our CEOs. I know some of you are probably thinking, oh, he did $31.6 million. Yes, he did. $1 million guaranteed. The rest was earned by hitting certain numbers and improving Disney as a company. That's how we should pay CEOs. I love it. Article, Kevin, I don't understand the bird flu. You may or may have not seen it. Here's the eggs. If you need anywhere between 16 to 18 eggs, come to my house. We get about 18 eggs a day, but here's the information that I finally found to share with you guys on the bird flu. And just imagine going in California and paying $8.97 for a dozen eggs in California. Ugh. Interesting article, 10 favorite stocks from Bank of America. This is a great article where it's specifically number based, but there's very little common sense. Shocking. They don't learn from past history. How long has Wells Fargo been undervalued? But if it's poorly run, it can't go higher. I disagree with most of this list except for NVIDIA. Please do your own work on it, though. I left everything I could for you to read on what you think. We'll see if you come to the same conclusion. With that said, any questions for tonight? Are there any questions you guys have that I can answer for you tonight in regards to anything? And again, the first part, we do have quite a bit new people here. So don't know if I'm answering everyone's questions properly. If you need to download that spreadsheet and you're not getting it, send me an email at kevinhurley@hurleyinvestments.com. Hurley. Kevin Hurley. You could do info@hurleyinvestments.com, but K Hurley will work better. Mary, Kevin, aren't you a little late to protecting Apple? Well, it ran up. Yes, we do want to be protected about 2 weeks before, and we were, and we had protection way up at 245. Took it off at 222. We had over a 10% profit. We converted to shares. We will most likely put Apple's protection about 6 weeks out in time to not get the in the month of options expiration volatility crush. So yes, we are a little late on Apple. That's just sometimes the way it works. And we're trying to do the best we can to make sure that we don't, we just don't want to, how'd I say it? We just don't want to, we just didn't want to take, we didn't want to lose the opportunity of capturing that money and converting it to shares, because the reasoning behind it was a downgraded that I couldn't come up with the numbers. And it seems like everyone else couldn't come up with the numbers. And so Apple popped up $8 today. So yes, the short answer is yes. We normally want to be 2 weeks out in time to counteract volatility crush, and having long puts in the money of options expiration. We'll be out 6 weeks with that protection. Great question. Are there any other questions from anyone tonight? If not, the goal is to have this up for you guys tomorrow afternoon on the myhurleyinvestment.com. Again, my goal, Dave Westlake's goal to help me out here, have this up for you on the My Hurley Investment singular tomorrow afternoon. Okay, I see no other questions coming in. Guys, have a great week. Big earnings coming up for us. And if there are no other questions, I'm trying to delay a little bit. What is the conservative issue with Bank of America? Abraham, what do you mean? What do you mean the conservative issue? Bank of America earns through 4 different areas: investment banking, IPOing, commercial loans, and retail banking. So Trump made claims about the treatment conservatives received from Bank of America. Abraham, I don't know. I haven't read that. So with your permission, I will do a little bit of research on that, and I'll try to come back with some information on that next week. I just don't want to, I'm not in the know on that, so I don't have an answer, but I'll respond next week to conservatives receive some treatment that might not have been good or good from Bank of America. I don't know. No answer as of yet. I'll research that and get back to you. All right. Hey, guys, have a good evening. Look forward to seeing you next week. Have a good week and pay attention to those earnings, because that could move some of our stocks a pretty good amount this coming week. Take care, guys. Bye-bye.